Now, if you're trying to sell your business, you're likely going to run into buyers that want to see you provide some type of seller financing, earnout structure, or rollover equity. And you can really hurt yourself by not giving some level of one of those three deal enhancers. And we're going to walk you through exactly why you want to do that. Now, almost every deal includes some level of seller financing, earnouts, or rollover. It's almost unheard of to see 100% cash deals. That's typically only when there's maybe the current owner has already passed away or there's a health issue. So in most circumstances that you're looking for, you're gonna have to give some type of financing to the buyer. Now, seller financing is the most common one that we see. It's common in the sub $5 million world that's driven by the SBA rules. Now, according to the SBA rules, you're not allowed to do earnouts there, and they just changed the rules to allow equity rollovers. So up until very recently, the only structure that was allowed there was seller financing. Now, very recently, even just in December 2024, a new rule passed that is more favorable to equity rollover. This video is going to focus on seller financing since it applies to the most people. If you want to see a video about earnouts and rollovers, leave a comment. We can make one of those too. Now, generally, buyers expect sellers to leave some skin in the game via some form of seller financing. They don't want to see a seller that's really just trying to take the money and run and has no stake in making sure that the transaction is going to go smoothly. But the amount of seller financing is really going to depend on the risk to the buyer in the transaction. So, a typical buy-side transaction that we see, 10% is kind of the normal level of seller financing. But that can get much higher if, say, the business is highly dependent on the seller's relationships. You need to make sure that those relationships transfer to the buyer. In those circumstances, you can see it as high as 30%. There's something off with the financial records that maybe make it so it won't qualify for as large of a bank loan. Then you're probably going to have to make up that gap with seller financing. So essentially you, the seller, is going to have to become the bank because the financial records don't support the valuation that you want. But one thing that really affects your buyer pool, if you are offering seller financing or not, is the rules within the SBA loan program. So the way that program works is the borrower can borrow up to 90% of the total project cost to buy the business. It's going to include, working capital and legal fees and everything. So they can get 90% of what they need to buy the business from the bank, but they can also get the other 10% from either investors or from you, the seller. So you, the seller, can provide a portion of their down payment through a seller note that's on standby for 24 months or by rolling equity in. So if, say, you kept 10% ownership, or if you provided 10% of the deal in a note on the 24-month standby, technically, via SBA rules, the buyer's down payment is met. They don't need to bring any cash. Most banks, though, actually require 2.5% as their floor. But that world of buyers that can bring 2.5% to the table is much, much bigger than those that can bring 10. I mean, you might increase your buyer pool by 10, 20x by offering that seller financing. And by offering that seller financing, you're going to increase the price by more than what you financed. So you'll probably end up getting more cash at the signing table by offering that seller financing, and then you still get the note as it gets paid off than you would get if you had only taken cash at the beginning. So it's not only do you get more cash upfront, likely, you'll get additional cash over time, and there's some tax benefits to spreading that out. So, if you're going to pay at a higher tax rate in that year where you have the large sum of income coming in, the installment payments will be taxed at a lower rate. So if you have any questions about getting your business ready for sale, leave them in the comment and reach out to us if you need help.